All right. So I mean, during the course of the beginner parts, we went through the beginner teachings, you know, and now we're going to be studying technicals proper, right? And this is the part that gives you the knowledge on how to analyze the market, how to know when to buy or when to sell. You understand? I'm about telling you
Okay.
that. All right. So first things first. There are three things that are very, or there are four things that are very important when it comes to this part of technical analysis and this strategy that we use to trade, right? Because when you approach the technical analysis part of trading, there are, you know, people have different concepts to which they analyze the market, right? Some people trade breakout and retest. Some people trade uh, Fibonacci. There are different strategies that people use to approach. But me personally, and what I teach my students is um, the structural liquidity pattern, directional bias, point of interest. So there are four things that you have to know, right, for you to be a very good technical analyst. The first thing you want to know is market structure, right? Please pay attention. This class is recorded, so you can also go back to the recording, but still pay attention. The first thing to know is market structure. The first thing every trader should know what market structure is. Now, what is market structure? Market structure is basically the current trend or the current movement or the current flow, whichever word you want to put it, of the market. Market structure is the current trend or the current movement or the current flow of the market. Now, what you need to know is that there are three ways that the market moves. The market makes its movements in three ways, right? There's no other way aside these three ways that the market moves. The first way is the uptrend. The uptrend, that's the first pattern that the market makes its movement. Now, how is the uptrend? How does it look like? So I'm gonna, sorry, give me a minute, let me mute. Can you see my screen? Please, at any point that you're not following me or you cannot hear me, just hit me up. Just chat on WhatsApp so I can know.
Okay.
Kenzo, you're finally here, right? Kenzo, are you here? All right. So the first pattern is the uptrend. Now, this is how you see the uptrend. In an uptrend, you see the market moving like this, right? You see the market moving like this. This is the pattern for an uptrend. Now, I'll explain what this means, right? Now, these things that you see here, right, are called higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. This is the ideal pattern for an uptrend, right? Now, this zone that you see here, or this point that you see here, is what we call an order block. Now, you learning or you understanding market structure, you will need to know what order blocks are called, right? Now, what is an order block? An order block is an area or is a zone in the market where there are a lot of institutional orders. An order block is an area or zone where there are a lot of institutional orders. So it's either they are buy order blocks or they are sell order blocks. Now, what does that mean? Now, this area where it's pushing price up, that's what you call your buy order block. So this zone right here, you can see this zone is the zone that's pushing price up. So you call this your buy order block. So this zone right here is called your buy order block, right? Now, this zone now that is pushing price down, you call it, this close zone, you call it your sell order block, right?
Okay.
This zone that's pushing price down, you call it your sell order block. This zone that's pushing price up, you call it your buy order block. This zone that's pushing price down, you call it your sell order block. This zone that's pushing price up, you call it your buy order block. So that's what an order block is. An order block is an area in the market or is a zone in the market where there are a lot of institutional orders, or you can call it limit orders, that's either pushing price to the upside or pushing price to the downside, right? Now, for an uptrend, you see the market giving you series of higher highs, higher lows, and the higher low needs to take out the higher high for it to maintain that uptrend. So that's how you guys still hear me.
Hello?
Can you guys still hear me? Can you guys hear me? Can you, can you guys hear me?
I can hear you,
Okay, good.
but I cannot see your screen.
Let me share my screen. Can you see my screen now?
Not yet.
Can you see my
Okay,
screen?
I can see it now. Yes.
All right, so let's continue. Now,
Okay.
for your series of although I don't know where I stopped before I got caught up, but I'll just pick up, right, or recap from for a series of higher highs, right? For it to be a proper uptrend, or for it to still keep giving you that uptrend, you need the higher low needs to take out this higher high, right, to form a new higher high. And then when it creates a new higher low, the higher low needs to take out the current or the recent higher high to create a new higher high, and it will give you a higher low, and that higher low needs to take out the recent higher high. So that's how the uptrend, keeps going up like that, right? Now, for
Mm.
every zone or for every higher high that the market takes out, you have what we call a break of structure. Now, for example, this zone right here was a recent higher high, or was a recent high, right? And now, what happened when price was making a move to keep maintaining that uptrend? It broke that high, which is what we call a break of structure. So price breaking out this key level or this high right here is what we call a break of structure to the upside. So that is what the break of structure means. Now, as it took out this high and created a new high and then pulled back, you can see it also went back up and what took out this high again, or this recent high. So you have another break of structure. So as price is, making that higher high, or as price is on an uptrend, you're definitely going to be seeing what break of structure, because for price to, be trending to the upside, it needs to keep breaking key levels, or higher highs. So for this same zone, you can see there was another break of structure here that price took out this high again, giving you a break of structure to the upside, and then you also have another break of structure here to the upside. So this is, an uptrend, right? I hope you guys are following me. Now, this is a single break of structure. This is a single break of structure because price is only taking out one particular high. Now, let me also explain something to you. Now, remember I said that this is your order block right here that's pushing price to the upside. And this is also an order block that is pushing price to the downside. Remember, I said an order block is an area in the market where there are a lot of institutional orders in the market that's either pushing price to the upside or to the downside. Now, there's what we call a breaker block in trading. And a breaker block is a failed order block.
Yeah.
Remember, an order block, when price is at an order block, it is meant to respect the order block. Why? Because it is an institutional area that's meant to push price, to the opposite direction. Now, when the market came here, remember this is an order block right here. This is an order block right here that's meant to push price to the downside, which it did here. And as price was approaching, it was meant to what? It was meant to, when the price came here, it was meant to push price to the downside again, as it did, at this area. But what happened? It broke past that level. Now, this zone right here that was once called or was once a sell order block, we'll now call it a breaker block. Can you still hear me? Can you guys
Yeah.
can you guys hear me?
Yes, I'm here. I can hear you.
Let me know if
I can hear you.
are you guys following me? Are you guys following me? No, no.
Yes, yes, yes.
Is it breaking on anybody's?
Can you hear me?
Yeah, is the Zoom breaking on anybody's end?
Not on my end.
Okay. All right, good. So let's proceed. Now, like I said, when price was approaching here, it was meant to push price down to respect this order block, but it did what? It did not hold. Instead, it broke past. Now, this zone right here that was once called a sell order block, we now call it a breaker block because it is a failed order block. So you want to take note of this. A breaker block is a failed order block, right? Same thing that happened here. When price was approaching this zone, right here, it was meant to what? It was meant to hold here because this is an order block, but it did what? It broke past, and this zone will now turn to a breaker block. This still remains your order block because it is not a failed order block yet. This still remains your order block. This still remains your order block. This will now call it a breaker block because it is a failed order block. When price approached it, it was meant to hold. So you have your breaker block here. You also have your breaker block here. These zones that price has taken out, they are now your breaker blocks. This still remains your order block. This still remains your order block. I hope you guys are following.
Okay.
So,
Yes, I am.
all right, awesome. Now, remember, we're still talking about market structure. And I am showing you guys, I said there are three types of ways, or there are three ways that the market makes its movement. And the first one is the uptrend, which in this case, you can see it here, right? If you also draw a trend line to connect, you see how price is ranging to the upside. So this is literally telling you that this market is on an uptrend. Now, the second way that price makes its movements is what we call a downtrend. A downtrend is literally just the opposite of how or what the uptrend is. So now let's draw the pattern for a downtrend, right? Just the way
Sorry, a quick question.
okay.
Eh, Yes. This recording, is it something I can have access to?
Yeah, I'll post it on the Zoom.
Because I was writing, but writing and listening is kind of distracting me, so I wanted to stop.
Yeah, I'll drop it on the Zoom, on the WhatsApp group.
Okay, no problem.
Yeah.
Thank
Yeah. So now the downtrend pattern. This is how the pattern for a downtrend is. You see the market giving you series of lower lows, lower highs. This is called a lower low. This is called a lower high. This is called a lower low. This is called a lower high. This is called a lower low. Now, why is this low called a lower low? A lower high. Wait, first of all, this is your higher low. This is your lower low. This is your higher low. This is your lower low. So a downtrend consists of lower lows and lower highs. Your uptrend consists of higher highs and higher lows, higher highs and higher lows, right? Your downtrend consists of lower lows and lower highs, lower lows and lower highs, lower lows and lower high. This low is lower than this low. That's why this one is called a lower low. This low is lower than this low. That's why this one is called a lower high, right? A lower high, a lower low, a lower high, a lower low. So this is the pattern for your downtrend, right? Now, just like you have on the uptrend, you also have your order blocks and your breaker blocks also in the downtrend. Now, remember, an order block is an institutional area that's pushing price either to the upside or to the downside. Now, here in this same downtrend, you also have your order block and you have your breaker block. Now, this is your order block that is pushing price to the downside. Now, this is also an order block that is pushing price to the upside. So you have your buy order block here. Why is it a buy order block? Because it is pushing price to the upside. You have your sell order block here. Why is it a sell order block? Because it is pushing price to the downside. Now, when this order block was respected and pushed price to the downside, remember you had a recent order block here that when price was approaching this zone, it was also meant to push price to the upside because there was an order block here. But because the market failed to respect this order block and push price to the upside, and it took out this low here or this order block here, we now call it a break of structure. Sorry, we call it a breaker block because it is a failed order block. Because this was once an order block, and when price got here, it was supposed to push back up and respect the zone, but it did what? It broke past that zone, giving us what we call a breaker block. So all other zones that are like that, they are also called what? Breaker blocks. So you have your breaker block here. You also have your breaker block here, right? This still remains your order block. This still remains your order block because they are still valid. They've not been taken out. So they are still your order block. This is still your order block. This is still your order block, right? So this is an ideal uptrend pattern. And just the same way, it was on the upside, price was taking out this recent highs, creating, and I remember I said, as price is taking out every recent high or any key level, as it's breaking it to the upside, we call this place a break of structure. So there's a break of structure here. Same thing with the downtrend. The moment price took out this recent low here, it's created a break of structure for us. Same thing here. The moment price took out this recent low here, it has created a break of structure. The moment price took out this low here. So for the market to keep maintaining that trend, either uptrend or downtrend, it needs to keep creating a break of structure, either to the upside if it is an uptrend or to the downside if it is a downtrend. So you should know that for every trend, for every uptrend or downtrend movement, there's always a break of structure. For you to maintain that trend, the market needs to give you a break of structure. So this is the second pattern, or this is the second way that the market makes its movement, which is called the downtrend. If you connect your trend line, and they connect, it literally tells you that, oh, the market is trending to the downside. Now, the third way is what we call the ranging market, right? Or you can also call it a consolidation market. What does that mean? This is when the market is just moving from point A to point B, from point B to point A. Like it's just, moving or hitting from support to resistance, resistance to support. Now, this is what I mean by that. Price went up, it came down, respected this zone where it pulled up from, went back up, respected this zone where it pulled up from, went back down, respected this point where it pulled back up. When once you see something like this, there's no decision yet. It's just ranging. This is what we call a ranging market or consolidation, because it's just moving from point A to point B, or you can call it resistance to support or support. Price is just moving from support to resistance, resistance to support, resistance, support, resistance, support. So it's just, going back and forth, right? So this is the third way that price makes its movement. The first one is the uptrend, the second is the downtrend, the third is the ranging market. Right now, let's give an example, or let's look at the charts to see if we can find these trends in the market. Hope you guys are still following up.
Yes.
All right. So let's go to the chart and let's see. Well, let me use. So for example, here, right, you can see how price was, giving you an uptrend, right? From this order block,
Mm-hmm.
when it bought, it pulled back, he kept maintaining that uptrend position or uptrend form that I told you guys, I showed you guys. You can see this was once an order block that was pushing price down. This is also another block that's pushing price up. The moment price took out this zone, it has given us what? A break of structure here. So here we have a break of structure, and also we have a breaker block here because there was an order block here that's pushing price down. So when price approached it, that order block was meant to push price down, but it did what? It broke past that order block. So here we have what we call a breaker block, right? Same thing here. This zone is pushing price down, and as price approached it, it was meant to push price down. But the market is on an uptrend. So for the market to keep, maintaining that uptrend, like I said, it needs to keep giving you break of structure. So you can see there's a break of structure here, there's a break of structure here, there's a break of structure here, right? And you can see this is a clear uptrend. So when market is moving to the upside, you will know. Now here, market was moving to the downside. So you can see break of structure here to the downside, break of structure here to the downside. So it is always clear in the market. If you look at another pair, for example, if we look at GBP USD, you also see, the uptrend and the downtrend patterns, right? So when price is moving to the upside, you will know. For example, in this case, price was moving to the downside, right? You can see break of structure here to the downside, break of structure here again. You can see break of structure here again, break of structure here again. The market was just giving you break of structures to show you that the market structure is on a downtrend. So these are the ways that price makes its movement. Now let's go back to gold. I think there was a ranging market trend on gold. I think so. Let me see. I think maybe on, let's say, 30 minutes or 15 minutes time frame. Gold was just ranging, ranging, ranging. So you can see here, for example, you can see these areas here, how market was ranging.
Yeah.
Sorry, I want to get that line right. So here, you can see, for example, see how the market is ranging, came here, moved up, came back to this support area, went back up to the resistance, went back down to the support, went back up to the resistance, went back. So you can literally see the ranging pattern, right? So
Yeah.
so there's no how you will not see the market, giving you, these three types of trend. The market must always either be on an uptrend or on a downtrend or on a ranging market or consolidation trend or consolidation market. So that is the structure for the market. Now, there are two things that you look out for in a trend. When the market is, either trending to the upside or trending to the downside, there are two things that you need to look out for. First of all, it is either you're looking to join that particular trend. So if the market is on an uptrend, which means the market is buying, it is either you want to join in for that trend or in that trend, which means you want to be looking out to, keep entering buy positions. Or if the market is, trending to the downside, and you've seen that, okay, the market is trending to the downside, it's either you want to join that trend to the downside or you want to take a reversal because the market cannot keep buying forever or the market cannot keep selling forever. At some point or at a time, it is going to reverse to the opposite direction and start selling. So if it was buying before, it is going to eventually also sell. And if it was selling before, it is also eventually going to start buying because it cannot keep going up forever or keep going down forever. So as a trader or for you to, trade, it's either you're looking to join in to continue in that trend of the market or you want to join in to reverse the trend, right? Let me take that again. There are two things that you look out for in a trend. It's either you're looking to join that trend, which means you want to join the continuation. So just as the market was, ranging to the upside, let's say it was here. It's either you want to keep looking out to keep taking buys, 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 or when it goes to a level, you want to start taking sells. Now, if you want to if you want to trade in the opposite direction, before you trade in the opposite direction, you need to make sure that you look out for the concept of a market structure shift in the market. You don't just join, or trade the opposite direction of the market if you have not seen that concept of market structure shift. So it means that if the market is on an uptrend, you don't just start taking sales without you seeing that the market has shown you a concept for opposition, which is reversal. Same thing, if the market was downtrend, you don't just start looking to start going for an uptrend or start taking buys if the market has not shown you a concept for reversal, which means the market is, done trending to the downside. So you need to always look out for the concept of reversal, and that concept of reversal is what we call the market structure shift. Now, how does that look like? For example, let me take this here. For example, now that the market was ranging to the upside, for example, this is what a market structure shift would look like. As the price gave you that higher high and the market does something like this is a market structure shift because for the market to still be on this uptrend, it is supposed to give you another higher low, not to take out this higher low here. So market taking out this higher low has caused what? A market structure shift because this is not the pattern for an uptrend. So this alone is a sign that this uptrend is about to reverse and the market is about to start selling. Same thing, the market was on a downtrend. The market was on a downtrend and it did something like this. Let's say the last low took out this last high. Now, remember, this is not the pattern for a downtrend. A downtrend is supposed to give you another higher low here and keep trending. But the moment the last low took out the last high, that has caused what? A market structure shift. And it is a sign that this downtrend is about to end and a new trend, which is now an uptrend, is about to begin. So you're now going to see something like this. Right? Now, this is what you look out for before you take a reversal, before you trade a reversal, or before you trade in the opposite direction. This class is about to end, right? So it's going to be recorded, so you can jump on the recording. We're going to continue from this part that we stopped. Today is Monday. Our next class is going to be on Wednesday, which is next tomorrow. So we're going to continue from here. So please make sure that you go back and watch this video so that because I'm pretty much sure that at some point you're distracted you know, and what have you. So for us to continue in the next class and for you to also catch up, you want to make sure that you go back to watch this video. Please watch the recording so that you actually flow when we get to the next class. So if you have any questions on what we've just discussed today, we just have 5 minutes, so you can go ahead and ask. If you have any questions on what we've discussed on this particular class, you can go ahead and ask. Anybody?
Now, no question. I have to through it again.
Renzo, do you have any question? Renzo, do you have any question? Is Renzo on this class? Kenzo,
Don't
do you
think
have
so.
any questions? Kenzo, you're always on mute, bro. Anyways, so yeah, we're gonna continue in the next class, and I'm gonna once the recording um is complete, I'm gonna send the link across. So see you guys. I dropped a trade on the group on Telegram channel. I believe that you guys have started copying and pasting your trades. Abasifreka, remember the last time I told you that you need to be taking trades. Even though you've not started trading on your life, at least you should be practicing on your demo. But after we discussed and I told you, oh, do this, you've not still made any move. And trades have been dropping. You've not sent anyone that you've taken, nothing, nothing, nothing. What's wrong?
I'm always seeing the charts. I'm always seeing the charts.
Charts?
The graph.
That's
I
that's
don't
not
usually
true.
see
That's not true. All the trades
the one I
that we
saw
chart, the entry points and everything
today
are always dropped.
was in the
So you
afternoon,
seeing
and
the
I saw
chart
it
is
this
not an
evening.
excuse because the parameters of the trade are dropped alongside with the charts. So I don't know why you're saying you're always seeing charts when the parameters are dropped as well. Like the trade I dropped around 8 p.m. I didn't even drop charts. I just dropped the parameters. The last trade before that one, there was charts and there were parameters. Every single thing, there are charts and parameters. It's just that USD of last week that was just charts. Every other thing, there's parameters. So what is happening or what's wrong?
What's
Anything
wrong?
wrong?
I'll copy tomorrow.
That's what you said the last time. Oh.
No, no, no.
If you like, trade, do. If you like, don't trade, do, or don't,
I always see the trade
don't
late.
let it serious. No wahala. Anyways, see you guys in our next class.
I want to trade, but I cannot wait to trade.
I don't understand.
All right. Good night. Thank you.
All right.